Hi, everyone. Welcome to the Corporate Venture Capital panel titled Investing in Tomorrow. My name is Daniel Petrarca, and I'm a first-year MBA student at Tuck. Our moderator today will be Ann Grevin. She is the head of innovation for Rabobank's food and agribusiness in North America and the managing director of Food Buys. Ann has been with Rabobank for 17 years, building and leading key client-facing business for the bank. In her most recent role, Ann and her team oversee Rabobank's pitch competition and an accelerator program for growth stage startups. We're really excited to have Ann as the moderator, and we have a phenomenal set of panelists that will share their bios with you in just a second. Ann and everybody, thank you for joining. The floor is yours, Ann.
Thank you, Daniel. It's an honor to be here. We're all, I think, really excited about the discussion. We had a chance to group around what we wanted to share with you all today. So a reminder, this is really for the audience, so please make sure you engage. Now, we do want to answer any questions you have, so utilize that feature below. Before we kick off, I think Daniel did a good job of introducing me. There's not a lot more to add, except that I have been very privileged to work with investors like these in corporate settings, but also other investors, venture capitalists, as well as many startups who are really looking to change the future of food. And so this is an opportunity to talk about what corporates are investing in and why, and how is it shaping their businesses. So without further delay, I want to go around what is my screen and have everyone introduce themselves, because as you can see, it's an esteemed panelists that I know have a lot of information to share with you. So I'm going to start with you, Mark, and I'd like you to tell a little bit about yourself. Just a reminder, who you are, how long you've been there, maybe a little bit of brief background about what you've done, how you've gotten to that point, and a little bit about your corporate venture group. Do we still have you? I know we were having a little tech challenge. Is it working, Mark? Maybe I'll pause with Mark and Ryan, have you kick off, if that's okay.
Perfect. Very happy to. Thanks, Ann. So Ryan Teksten, I'm a director of investments at Leaps by Bayer. We are the venture arm for Bayer. Essentially, our investment group is separated into two different sections. So there's a life sciences portion focused on human health and one portion on crop science. So as one of the three investors on the crop science side, I've essentially been working in finance for about a decade and investing within the ag sector for about 4.5 years. Started off as an angel investor and have been with Leaps here for 1.5 years. So, my background, like others in the industry, is not a direct path essentially into the ag sector. I actually did start out as a farm kid in Southwest Minnesota, also moved to Colorado in the teenage years. So ag is the family business, but as ag tech, essentially as a sector represents, it's a combination of data, of economics, and ultimately technology. So, my background includes being part of a startup that had an IPO, working at Fidelity Investments for 7 years, and also, essentially being part of the ag community, since I joined the family business, if you will. So very happy to, sort of expand more on Leaps later, but we are organized, sort of as a top-line summary, as an impact fund. We have about $1 billion deployed. We make investments that are stage agnostic, so everything from a joint venture with other investors, all the way from seed to late-stage investing. So we really think deeply about impact and like sort of the change that is for the good for humanity and the environment. So looking forward to sharing more about Leaps and our investment thesis later.
Great. Thank you, Ryan. Erin, it's next is to you.
Thanks, Ann. I'm Erin VanLanduit. I'm the head of corporate ventures at Cargill. I am actually fairly new to the organization, but my background over the last 1.5 decades has been working at primarily global CPG food and beverage companies. So companies you may recognize like Kraft Foods, Tyson, McCain, SC Johnson. And I recently came on board to establish this corporate ventures function at Cargill. So much like Ryan just said, and you'll hear from Mark if he successfully joins again, our mandate is making strategic investments. We're focused on growth stage, so Series A and later. We invest off corporate balance sheet. We don't have a designated fund size. We're not quite as big as Leaps is yet, but we're making a decent amount of investments in this space. We do have some preliminary defined verticals where we're looking for investment, and I can talk more about those later. But probably one of the most relevant recent investments we made, because it is an ag tech company, is in a company called Bushel, which is an ag supply chain management platform.
And I might add, it is a Food Bites alum now, so we're very happy to make that investment. I think Mark is still challenged trying to get back online, but we will, allow some time so we can hear from him about Syngenta and the structure and his path to CVC. So you guys did a great job of really sharing about a little bit of your background, how you ended up there. Maybe you want to talk about how your fund is structured in terms of the areas of focus, and how you measure success. In the interest of going back and forth, I'm going to go back to you, Ryan, with that one first.
Sure. You think the easy part there is the measures of success, right? So any investor, strategic or financial, is looking for a financial return. I think the scorecard by which that is, sort of at the top or middle, differs depending on essentially who your limited partnership is, right? So for us, while returns are important and we do track them very closely, it is not the single KPI of success, right? So our investment committee essentially is constituted by the CEO, the CFO, and the president of the business unit. So it's a rather small investment committee. So that gives you insight into the level of rigor that goes into every investment, and whether that be 500 or 500K or $1 million, all the way up to larger check sizes. It levels up to the CEO of Bayer. So really what it means is we look to find and align on the value proposition, and as an impact investor, we think about sort of really long-term disruption in technology. So there's a lot of ambiguity in that space, and the time horizon for that payoff is really about impact to the business and impact to the community that we seek to serve. So that's really looking at environment and nutrition holistically. So again, financials are important, but it's more about larger impact, and thinking about how does the larger ecosystem that each of these investment sort of targets participate in, and how that grows over time. That's an important metric for us, and we seek to align on the business, whether they be in R&D or commercial, and we seek to sort of align on strategic terms if that's a valuable way to align on the investment, on the term sheet or within the large investment opportunity, and we do that for the growth of the business on both sides.
So Ryan, just to confirm, and I think you may have said this, but I just want to make sure. You look at seed all the way up to all the way beyond, or what levels are you entering it?
Yeah, exactly. So seed investments, we look at sort of post-revenue seed investments as a very viable opportunity within in the ag sector. It's very logical to think of sort of a 6 or 9 million pre-money valuation, and a company might be raising anywhere from 2 to 4 million on that, right? So there's room for multiple investors around the table at that angle, and we are thinking about what does this look like in a long run opportunity. So seed, the labels of early stage seed or seed plus or Series A, it's sort of a fungible label at some point, because companies are looking to find product market fit and then expand that into a growth environment. So once it becomes a price run with revenue, that's a great sweet spot for us.
Great. Erin, I'm going to go to you, and then we'll go to Mark. Just make sure his video is all working. Um, Erin, so the same question to you, if you don't mind.
Yeah, of course. So I would say similarly to what Ryan said, obviously financial returns are part of the equation, but our primary mandate is around strategic returns. I would say what the type of metrics we use to measure that actually vary depending on the type of deal that it is, and what the eventual, strategic goal is. Is it about, enabling, some type of enabling technology to help the business? Is it some other type of, maybe technology that early access to would give us some type of a competitive advantage and allow us to, enter a new line of business or grow our business in a specific way? Or is it a company that maybe we want to add to the portfolio at some point through an acquisition? So there are different strategic outcomes that we might be looking for. And we would base, how we structure the deals and then the metrics by which we measure that success based on what that eventual, desired strategic outcome is. So you'll see, if you look across our portfolio, we have, a variety of types of deal structures. But I would say from a stage perspective, we're a little bit different than what Ryan outlined. We do look more at growth stage companies. So we are looking primarily at Series A and later. That doesn't mean we won't or can't make a seed stage investment. But, it becomes, I think a little more difficult maybe to manage those investments when we actually have a holistic innovation strategy. Ventures is a part of that. So also part of that innovation strategy is our R&D, and then we have like an internal technology incubator group. So sometimes like those seed stage or the earlier, friends and family stage really fit more with what R&D is looking at partnering with, and then we make investments as they get a little further along and get closer to commercialization, generating revenue, et cetera.
Great. One of the things we did have a chance to talk about in our pre-call was really about this idea that was, I think, shared with us. Can't remember which one of you, but one of you around investing in what's around the corner. And I love the way that was termed. And I'm curious to know, as you guys are looking at, the future and what your respective investment strategy is and what your corporate alignment is, what are some of those things that you see as key in what's around the corner and type of investing that you're making, and any thoughts you can share about what I would call sort of the biggest challenges that are going to be solved with these type of investments? And because it's just you two, I'm going back to you, Ryan.
That's great. So I characterize the ag sector from sort of the 1960s probably until now. There's been a big focus on sort of more food to feed a growing population, and the ability to shift that mindset to think about sustainable agriculture for better food. And again, this is the sort of the life sciences aspect of Bayer from human and crop, is that there's a real opportunity now to think about better food with better nutrition, right? And those two are linked in a very unique way. So we think about that, sort of from a LEAP perspective, right? Sort of harkening back to the name of the organization, there's better use of land and resources. And so if you can, for example, decrease the cost of capital for a farmer in South America, that means the farming is more efficient, and they may be able to improve yield on the same amount of arable land, and that will, essentially reduce the amount of deforestry that may happen by that farmer or that sort of collective of farmers. So we think about it as a system of systems. There's really an angle around every investment that goes back to sustainability, and the environmental and nutrition impact is important there. So we think about alternative protein, opportunities, reducing crop loss. Certainly, sort of the carbon sequestration space around, sort of soil health holistically, and carbon being part of that. So, we think about that in that sustainable agriculture and better food mantra of, from more to better, and knowing that sort of caloric distribution around the world, that the food security exists everywhere, and it's a problem that needs a solution, and it's actually a very worthy problem to chase after, and technology is one way to do that. So finding those disruptive technology solutions that scale broadly are part and parcel of our investment thesis.
I mean, one of the things in all candor we hear a lot about is we hear about, feeding 10 billion people by 2050. But what we don't hear, and it's I would say, an equal challenge for all of us, is that the growing population is growing older. So the demographics of the global population is getting older. And as a result, feeding a growing elderly population with nutrient-dense foods is definitely something that is coming upon us. We're all getting to live longer. There's benefits and there's challenges, right? Erin, from you, what I see you have your pup joined us.
Yeah, my coworkers back
your
there.
Coworker, very cute.
Well, welcome to COVID time. So I would say, we share some of the same interests and thoughts, that Ryan just mentioned. What I would say is, generally speaking, globally, like, consumers are changing. Consumer behavior is changing. What consumers expect from their food today, and I think into the future, is going to be very, very different. So, this concept of functional ingredients. So, to your point, Anne, that you just mentioned, around having maybe additional benefits, a different nutrition or nutrient profile, in maybe some of the more commoditized crops that are out there. Like, what does that start to look like? What's the technology behind that too, right? So things like, so much is happening in biotechnology. Like, how do we apply that to help, like, create this food system of the future? And then, there's a lot happening with respect to farming systems. So I know people talk a lot about indoor ag and vertical farming, but really, like, there's so much happening with those technologies that are being developed, that what happens when you start to apply that to, open field ag or row crops. There's just so much that can be done there, and it all harkens back to, feeding the world better, like Ryan mentioned. So, how do we do more with less? How are we more efficient? How do we provide things that are, more nutritive and more nourishing? So those are all, very interesting. Another look around the corner is, this, everyone talks about transformation, right? I think, the globalization of every business and the digitization that's happening of everything. Like, I think gone are the days. Well, we're getting to the point where the days are gone where everything is kept track in a physical ledger, right? Everything is coming onto a digital platform. People are interested in more transparency in things like trading. So, farmers want more control over their destiny. Suppliers want more transparency into, where things are coming from, and be able to tell that to their customers and consumers. So a lot happening, but I think it all kind of goes back to this consumer trend of, demanding more of the food system, demanding more of, what they're putting into their bodies on a regular basis.
Thank you, Erin. We have a question that I think is a really good one, just to follow on to this, and it comes from Elizabeth Holmes. To continue on my question related to alignment with corporates, is your venture arm acting as the tip of the spear, leading the company into new areas, or investing in areas that support existing businesses?
Both.
Yeah, I would agree. We're both. I think we seek to find strong alignment with the strategy and R&D side of Bear Crop Science. But at the end of the day, the executive leadership looks to us to really challenge the preconceived notions and find opportunities to explore beyond sort of the time horizon where the business typically operates.
Here's another question that's really also a good one. And this comes from Caitlin Martin. She asks, how do you think about keeping independence among your venture companies versus integrating them into the corporations more fully over time? And I know you guys have different approaches, so it would be interesting if you could share a little more about that.
Yeah, I think that's actually a great question, and I think it gets to the heart of what strategic investing is all about as well, right? So it's not just about us putting money in and then seeing what happens with the company. Like we very much yearn to be strategic partners with these companies that we're investing in, but there's also a very, I would say, clear separation of letting that company really run itself and govern itself. There's always a conversation about who's the best parent of this company, this technology, and I think it's a good conversation to have. But I would say, starting out, the relationship is meant to be a strategic one, and it is minority equity investment is what we're making. So we would expect to act in that way. Incorporating them into the company happens, I would say, through, there might be commercial agreements, if we're a customer of a technology that the company in our portfolio has, or if we have maybe joint development agreements. So it's kind of always done in that way. We never absorb companies or consolidate them unless, we buy them, unless we acquire them or, plan to own a majority of them and eventually acquire. So it's very, very different than our, corporate development and M&A process is, the minority equity investment that we do in ventures.
Yep. It's actually a really great question. I think every corporate organizes a bit differently. I'd say for us at Leaps, we sit as a separate division. So we're not actually organized into either the pharma or the healthcare side of the business or bear crop science. So as a separate division, that creates a level of autonomy. And, sort of we have our own audit and sort of information practices. And so as investment professionals and those that support that function, we operate, with sort of a very high degree of integrity and autonomy. And yet when we seek to find the alignment with the business, we have great partners inside, at least on the bear crop science side, an organization called Open Innovation and Strategic Partnerships. So these are the folks that professionally manage collaboration opportunities with companies large and small, from scientific bench research all the way through collaborative, in-field demonstrations and proof of concepts. So what we aim to do is sort of like set the table, is my analogy. We want to make sure all the pieces and parts are on the table for a really great meal, but we're not going to dictate how the meal gets prepared or even frankly what gets served. What we want to do is align the intention and the opportunity so that our colleagues over at OISP can actually create that partnership so the program management function is actually done within the business and is best aligned. And so just like every other board member, even a director role that has a fiduciary responsibility, we hear updates on that relationship along with other board members and act in the best interest of the company where we represent on a board basis. So we take that board director role very seriously, and the information is even through the diligence process sort of sectioned off so that there's not a sort of a collaboration that turns into a situation where we have a bleed over of information that's inappropriate.
So one of the questions in that, Ryan, as you said that, one of the questions that had been raised to me by one of the startups or one of our alumni was really about when, and it kind of goes to the question about a startup having a corporate venture group invest. Is it something that you guys look for to have a partnership type of agreement, like a board seat, as you mentioned? Is that something that's important? Is it necessary in every situation? And really, how do you determine that? Because I think, that's where some people say, do you go with corporate venture money? Do you just go with venture money? And we talked a little bit about that, but I think it's that understanding of, is this an investment that's a partnership that's expands? And I think you both have sort of different views on that. So I'm going to put that back to you, Ryan, based on.
Great. I think the short answer is it depends on a deal by deal basis.
Yeah.
So there's times when we find that a participation and sort of extension of that diligence, especially in early stage companies, is a very natural alignment for our sort of bear crop science business with the target investment or the startup. But that's not always the case. There's investments where we've taken observer roles and are very active. I would say we are not passive investors, so we're actively engaged on an observer basis. And sort of look, the natural course of things are, if you're an early stage investor and the company does well and raises follow-on rounds, you will be moved to an observer role more often than not. And so, being able to sort of continue to provide value and sort of increase the effectiveness and essentially the bottom value line of the business is the hope for all investors in that case.
Right. Erin, any thoughts to add to that?
I think Ryan said it. Ryan said it really well. I'd say we have the same philosophy. We definitely are not, and as I think is the case with a lot of strategics, like we're not passive investors. Like the reason we're investing in these companies is because we see value in a partnership. And how that is structured and evolves really depends on the deal, on the stage of the company, who else is around the table. And I think, Anne, there's actually a really good question about this that someone put forth about investing alongside other VCs and other strategics. That's also important and plays into that decision and that thought process as well.
Yeah, let's go to that question. I think it came from Caitlin Martin. How do you think about keeping independence among your venture companies versus integrating them into the corporation more fully over time?
I think we answered that one. There's, I think it's.
I may not see them all, so if you do see one.
Yeah. No, I think it got voted to the top of the list now. So it says, would love to hear how you approach collaboration versus competition and working with other venture groups and or strategics. And I think that's actually a great question. And I think actually one that I hear a lot from founders, from my organization, as we really get this function kind of up and running as well, is I think it's actually really important to have other investors around the table, especially ones that have complementary skill sets. So I really like to see other food tech, ag tech, VCs around the table. I like to see other strategics, and we can figure out, exactly what the right, I guess, combination is in a round of investments. But I really see it as building, the right skill sets to help these, or the right capabilities to help these companies succeed. So, while I think everyone likes to pit each other, against ourselves, it's really not that way. I mean, I know I talked to Ryan about us doing some deals together and overlapping areas of interest. Mark as well, which it looks like unfortunately has technical issues and can't get back on. But this investing space in ag tech specifically, it's not huge. We all to some extent know each other or know of each other, and could potentially work on deals together. So so I would say that building camaraderie, building partnership is really, really important. And I don't necessarily see it as really competitive and cutthroat. I think I see it as us all putting our very different or complementary skill sets together to help these companies succeed in the long term.
Yeah, I mean, I think that's one of the things we believe very fully, even from our seat, that in collaboration, whether it's investing or directly piloting with some of these companies, if we're doing it along with other members of the community, i.e. other companies like yourselves, the success or the failure is going to be realized in a much faster way. If everything's happening in isolation, it creates stagnation and things don't move forward. So even from my lens, that's what I'm seeing. And so I've across the board, collaboration is something I hear all the time, because there's a real recognition that it's needed to sort of accelerate the pace of change, just based on where we are today. So hearing it from you guys as well is really profound. Do you have anything else you wanted to add to that question, Ryan? Anything else?
Yeah, I would, and hopefully it speaks to the attendees as well for today's event. When you have the chance to ask the question, what problem do you want to solve and who do you want to solve it with? I think those are like sort of two really critical, but also like at the moment that you can ask those questions and make a choice, it's really a blessing, right? So to the degree that I was able to ask that question a couple of years ago, I really resolved on the question, like, I want to solve these, larger issues around food insecurity on a global basis with colleagues that I really respect, that have, sort of a combined view of doing well. And, like how that works out, I think is like a third order issue. The question of what problems do you want to solve, and then who do you want to solve it with? I have found that the investment community inside the ag and food business, as a category of investors, are extremely professional. They have great sense of humor. Like, these are the folks you want to spend time with on a very like professional and personal basis. And to me, that speaks of the quality of the relationships that developed over time. And it's not a closed environment. You can enter this, community and participate as an angel investor or a corporate investor, and be, viewed with lots of respect from the get-go. And I think that speaks to the industry, very much in the ags industry. I grew up seeing, deals done with handshakes across the fence, right? And, I remember the IBP sales or guy, came and bought our 400 head of cattle, and it was a handshake. There was no paper, and it was actually a blank check that he handed over. So that level of trust and community exists in the investment community. And I think that really speaks highly of the members that were early on that developed that DNA. And, we all are co-investors at some level, right? So the network effect of success actually just builds on each other. So we tend to be, sort of, in the mantra of like always playing it forward for the startups, but also other investors. And really very much the ethos of, let's find a way to do a deal together. Let's find a way to do business. And then once you sort of do the network effect, you realize like you've already done a deal together. You just didn't know it before. And that just builds, continued camaraderie. So I think the good actor approach, we have a great community, and I applaud those that have come before us. We stand on their shoulders.
Thank you, Ryan. I think that's very well said, and we need that across the board more. So I would have to agree. At Rabobank, having been here for 17 years, I feel like I often run into people that I've known who've gone on to do other things, but the community stays pretty tight, and you stay very connected. So I have to agree with that. So, I'm going to switch it a little bit. I'm going to talk a little bit about, well, I actually ask you guys to talk a little bit about, what do you get most excited about right now as it relates to some of the innovations you're seeing? Like, if you were to pick one, what would it be? Is that you think is something to be watching? Erin, I'm going to let you go first. The tough question.
The tough question. Yeah. Wow, just one thing. It's really hard.
You give more than one.
So, I think, well, so I'm saying this, I guess, more from a, there's so many great things out there, but, really this move towards, doing things more sustainably. Like, I get really, really excited when I think about, the impact that, large corporations like the ones of the people, sitting on this panel can have if we really start to take, and we are, if we're really taking sustainability seriously. Specifically, I get excited when I think about the opportunities in carbon. There's so much activity happening, that whole space is starting to, kind of take shape. And, we're not exactly sure where it's going to go. And we're all kind of, we're all thinking about it and approaching it in different ways. And, what's really great is that there are a ton of startups trying to address all of the issues that we have, with our ag supply chain related to carbon. And I just think that there's so much there. I get really excited when I think about that. Me personally, but also from a business perspective, I think there's a lot there that we can do to have a positive impact on the world.
I love that. Thanks, Erin. How about you, Ryan?
Yeah, perfect. So I don't disagree with anything Erin said. And I think that the ability to have choice for the food and ag sectors, whether you're a producer or a logistician, the choice and how to operate, I think, is amazing. And that choice, in my opinion, is actually influenced heavily on the data. So if you sort of dissect data, I sort of use the 4V model because it's easy to remember, like, the value of data, the veracity, the volume, and sort of the speed, right? So uh, thinking about all of that, and what data means in the ag environment today goes back to, the example of carbon sequestration. Like, farmers have been sequestering carbon for a long time. How much, we actually don't know quite yet, right? So even with today's high-tech solutions, we're just at the cusp of, essentially assembling the data cube at cost, at scale, that allows us to essentially measure that on an effective basis, and then, create a revenue stream for growers and producers, such that additionality, sort of meets the expectation, and we know sort of from a baseline plus, moving forward, where the improvements might lie. So for me, the data piece, but data's hard. It's not, it doesn't just appear. You have to have hardware, you have to have software, you have to think about sort of ownership rights. And I think Rabo has really been smart about, laying out a vision there. And really thinking about, like, this all ties back into choice. So, farmers, producers, input companies like Bayer, deeper post-farm gate like Cargill, there's a greater sense of choice. And that puts the onus on us as larger ag businesses to provide choice that is most beneficial, to customers at the very end on the consumer basis, and also growers and producers who oftentimes feel like, they're being pinched from both sides. So for me, that choice is really influenced by data, and of course you peel that back, and that's part of our main effort, investing for Leaps, is to uncover those opportunities.
Yeah. Here's another question from the audience, and it's gotten 3 votes. It comes from Brittany Anthony.
That's a good question.
And I'm sure you both have some views here. Do you have any investment advice for individuals who would like to start small and invest their own equity in the agricultural investment space?
So I can speak from experience a bit here. So my first sort of foray into this was really mentoring and being part of sort of accelerator projects, whether it be Mass Challenge or something larger, that's really just food oriented. I essentially developed a relationship with the Mass Challenge leadership. Then I said, like, who's your best food and ag, 5 companies that are in this class every year. And I spent time with them and ultimately helped, those companies achieve their goals. And my first investment came actually as a founder said, like, hey, as a way to say thank you, we want to ask you to invest if you're, a qualified investor, and, there's sort of these levels of, sort of, you have to meet those, qualified investment terms. But that was the first start to that. And absent that, you can find ways to invest, as almost as a pool, and find ways to bootstrap and be a friends and family round. Like, there are ways to participate early. Of course, the portfolio effect doesn't take full effect until you get to 10 to 15 investments. But if it's really about starting small and making your name, I think that's a great way to do it.
Erin, do you have anything to add to that, or? I think that's pretty.
Nope. I think that's great advice. And given that Ryan's done that himself, I am not an individual investor on that level, so he definitely has the expertise there.
There you go. We have another question, which is something that I'm always looking at, even in evaluating startups, and I know it's something you guys consider when examining potential investments in a particular company. How do you view team, collective experience, extent of IP, market traction, and market size, and weigh those in your decision making?
It's a lot to unpack.
I think they all. I mean, for me, they all weigh quite heavily when we're looking at it. But it's team, it's the IP, but it's also, how do you determine the ability for them to get traction? And that's what we're trying to unpack at Food Bites. But I'd
say that it's not as easy as sort of a slider bar on an Excel spreadsheet on a scale of like 1 to 10. And if it comes out as above 7.5, you invest. It's in the end of the day, it's more qualitative than that. I would raise that up to say, I often ask the question, does this company have the right to win? right? So every company's different, the market, the traction, the product, the team. But at the end of the day, do they have the right to win? And I think that if the answer is yes, then you've gone through the questions of, is the IP, substantial? Is it differential? Is it defensible? Is it, important to the market? Does the team have the ability to grow into a company that will go have the right to win? And, maybe the market will meet their expectations in 2 or 3 years. And that's more of an assessment on the market. Will the market grow into accepting a new solution that maybe looks or feels different than the incumbent, product or service? So it goes back to that right to win in my book.
I like that.
Yeah, I would agree with that. And I think that, the how you weigh each of those attributes that person who asked that question asked also depends on the stage of the company as well, right? So if it's a very early stage, pre-revenue,
Yep.
you maybe look more at like the management team's experience and capabilities, total addressable market, their right to win. And then maybe if it, is a little further along, like what kind of actual market traction they're getting, and then take into account those kind of things. So we try to be as objective as possible, but it really does depend on, a lot of different factors, but those are some of the key ones that we look at as well.
One of the things that I also think about is, maybe aligned with what you're saying, Ryan, is do they have the right to win, but are they really solving us a problem? It's that core. There are a lot of nice ideas, but are they meaningful in what they're trying to address? And, a lot of them don't meet that. So it can be the first challenge. In the interest of time, I think we have a minute left. I'm not sure, but I wanted to make sure that you guys had a chance to share your words of wisdom. Many of the people on this line, I think, are students or graduating at certain levels. There are a lot of those who are probably alumni and maybe looking at transitions, but these are hopefully the future leaders of food and ag, whether they're investors or they are potentially go into companies. So what is the one piece of advice that you would really want to share with them from your seat as an investor? And maybe I'll start with you, Erin.
Sure. Network. So build your network. You can never discount the value of that, especially, like Ryan said, in this space in ag tech, fairly small community, relatively speaking. Everybody has heard of or knows everyone else. Reputation's important. So, if you want to work in this space, then start to really, really build that network, and leverage those connections, and build your brand, build your reputation, and start to thoughtfully create a network that's gonna serve what your eventual goals are.
Great, I love that. Thank you, Erin. Ryan.
Yeah, Erin saw my notes on the answer to this one. My take on this is, build your board of directors, right? So your personal board of directors, find 3 to 5 people that will get together with you, have a view and vision into, the industry and your goals and objectives individually. And, these people should ask you questions, not make statements, right? So, hold yourself accountable to yourself and say, like, look, I want to get X accomplished, and build your board of directors such that, you can get together with them collectively or individually. And, that's an extension of this networking. But when you ask somebody, will you be part of my board of directors? Will you, chat with me every 3 weeks? I want to get you caught up and ask for your advice. The good board of directors will say yes and yes and yes, and ask you questions that will challenge your own bias, push you in a direction that may not be otherwise clear and obvious. And ultimately, they'll be bought into your success. And we all need more folks like that at any level of your professional maturity, right? So in whether you're about to retire and move into like the next stage of your life, or you're just graduated from undergrad, a board of directors is important.
Yeah. And reach out, find me on LinkedIn, shoot me a note if you have questions following this. Always happy to build a network.
Yeah, and I'm sorry Mark couldn't join us, because I know it's a very collaborative team, this group. So you missed his pearls of wisdom. The only thing I want to leave you with is a lot of gratitude. Thank you so much. This has been a great opportunity for me to get to know you guys more and appreciate all the audience engagement. And remember, you're always students. That would be the one piece of advice I'll give you. You're always learning. Don't forget that, because you'll transition like I have into many different things, but keep that mindset open so that you can be available for that. Daniel, I pass it to you.
Thank you, everybody, for joining. Ann, Erin, Ryan, and Mark. Sorry we couldn't get you back on board. There'll be a next time for sure. Everybody else in the audience, thank you for joining the panel. And then stay online for what's coming next, which is Financing the Future of AgTech. Thank you all for joining. Have a good day.
Bye, guys.
Thanks. Bye.
Thank you very much.